let's talk about the stock market quickly. The market was up Thursday and Friday, been trending flat today. Does that mean that the worst of the crash is over, being that it ended last week on a positive note?
Not yet, but we are seeing some signs of liveliness in the market. I'm waiting for the S&P future to break 4,000. If we get above 4,000, we'll have like a little zone of safety where we're like, great, the worst of it is over. So, and if we're up Monday, Thursday, Friday, we'll be good and we'll be out of like the danger zone. But if we topple back today and Friday, we're back in that like bearish area what I'm worried about. So, but we are seeing some signs that things are picking up despite it'll be rocky until the election pretty much. But if we can break about 4,000 on the S&P 500 future or 400 on the SPY, we are safe. Well, we're in the safe zone now. So that's the area to mark off and to look for to get a sign that we'll be okay.
So a recession, by definition, two negative quarters of GDP, I believe. And we are just finishing this quarter. We'll finish this quarter on Friday.
Yes,
Friday
sir.
will be the beginning of the third quarter.
Mhm.
So those reports will come out probably a week after that.
Mm-hmm.
I say that to say there's a very good chance that when those reports come out, it'll be another negative quarter. We had the first negative quarter, which would put us in officially, it will put us in a recession. Like
Yes.
they will say like we're in a recession. So even psychologically, how do you think that would affect the stock market? Even if we start to trend up, if it's said in newspapers and on the news that we are officially now in a recession, do you think psychologically that's gonna, hurt the stock market even further?
We won't have the growth that we did last year, but the stock market tends to recover before the economy does. And for anyone who says that's not true, if you're African American or Latin American, you already know it takes a while for our economies to recover. The market probably hit all-time highs before the general U.S. Even seeing what's going on with flights, pilots being on strike. There's so much going on.
Mhm.
I don't think that the American economy, but the American economy and stock market are two different things. I know we think they're tied 100% to in how they move with one another, but the market usually recovers before the economy. I think things would be bad for the general economy until at least the first quarter of next year, but I think the stock market should recover before then. And that's one of the reasons why it's important to invest, even when it's bad. For all my investors, please keep investing, but don't look at your account every day. This is the season where you just playing peekaboo and be like, damn, I hope this doesn't go down any further. But Thursday and Friday does show it's important to not time the market because no one thought the market was going to go up Thursday and Friday. And Friday we shot up a lot. Just continuously invest. And in the end, it all works out if you're investing over a 5-year period, a 10-year period, definitely over 30 years.
Yeah, and one of those things, especially in a recession or when there's high inflation rates, it was interesting. I was reading Business Insider, or maybe Wall Street Journal, and they were talking about two places that people put their money during this time. One was being commodities, obviously gold and silver, but then they had this whole article on agriculture.
Yeah.
And it brought me back to a time when there was three gentlemen in South by Southwest, Austin, Texas, talking about agriculture and investing in corn and wheat and ETFs that have them as well. And so there was two that I was reading about. Wheat, obviously, it's very fitting, WEAT, and corn, CORN, ETFs that are agriculture ETFs. They're up over 30% respectively in 2022. And so there's places that you can invest. Obviously, during these times, it's going to be higher, but there are pockets of the market that are gaining over this time, even in a recession, because people are always going to eat. Like, we know that, right? Like, some things are not up for debate. Like, people are always going to eat. Obviously, inflation, the prices of those things go up, but people are still going to eat. They're going to still consume wheat. They're still going to have sugar. Those type of products in these type of environments are pretty good investments.
Absolutely. As Kramer famously said, we got to give him credit. There's always a bull market somewhere. Like, the entire market is not always down. So commodities like oil is ever since that crude future went negative 2 years ago, the oil stocks have taken off to the upside. And that's, as we know, a sign of a recession. Anytime the oil market goes up 100% or 50% in 1 year, that is a sign. We see it in gas prices, that's reflected. But usually if the market is down, there is some sector somewhere where you can navigate and find a way to get some gains. So please be on a hunt for that and look at every sector across the world to be able to get your edge in the market.
There you have it. So I made a post last week. It went semi-viral, I think. I saw other people remixing it.
Did we speak about
Diddy
this?
invent the remix, not
We
y'all.
spoke
It's
about
okay.
this. They still gonna do it?
Yes.
Okay.
God bless America.
We want royalties.
Yes, please, respectfully. I bonds. So we spoke about this on Market Mondays a while ago. Are I bonds good investment for these times in the market? And for anybody that doesn't know what an I bond is, there's an inflation-based bond that grows. The interest is based off of the rate of inflation. So right now, I think it's 9.62%.
Yeah.
And it earns interest over the course of 30 years. Can be cashed out after 1 year. But I do believe if you cash out before 5 years, there's some level of a penalty that's in place. But I bonds, obviously, during inflationary high times like it is right now, it's an attractive place. I think if you have some money to put, they don't let you put a lot of money in, $10,000, I believe, and 20,000 for a married company, but for a married couple. But hey, could still be beneficial. So what's your thoughts on I bonds?
I want to throw it back to you. You made the post go viral, so I'm not gonna remix you on here.
I'm gonna defer to my
Yeah,
right now. It's a good investment.
I think it's a great way to diversify, especially like, if you have, like I said, it's not, well, a lot of money is it's relative, right?
Yeah.
So 10,000, I don't want to seem like $10,000 is nothing, because it is a lot of money to a lot of people. But if you have a situation where you have $10,000 and you might not necessarily want to just invest it, or you might not necessarily just want to put it in a savings account where it's going to earn nothing. It is a good alternative to have the money growing, and it's in a safe place, right? Government backed. So it's the odds of it just disappearing is extremely low. Anything is possible, but it's almost impossible that that's going to happen. And yeah, you earn interest, and like I said, especially now, inflation at that level probably won't last forever or for too much longer. But even if it drops half, even if it goes to 4%, I mean, that's better than any online savings account, any savings account that you can have. So, if you're looking to just park some money somewhere and just have it grow for you, yeah, like I said, is it an investment per se? Is it going to make you rich? No, it's $10,000, 10% on $10,000 it's not going to be life changing, but it is somewhere that you can earn a higher interest rate than you would be earning in a bank, and is not the same level of risk that's involved, whether you're talking about with crypto and stocks. And I think the key is, you want to have multiple different things working for you. So yeah, if you have some change that you don't have anything to do with, and you don't necessarily want to invest it right now, you can put it in the I bond and let it grow, especially a married couple, because now that's $20,000. So that's a little bit better than 10,000. So it allows you to put more money in. So yeah, it could be definitely beneficial, but just want people to know that it's not something that is gonna be like you could just throw all of your life savings in, and just, of course, that would be amazing if there was no limit.
That would be great.
Yeah, if you could earn 9%. Now that changes if you could put $100 million in and you get 9%. The whole world would be doing that. But
yeah, I mean, but even statistically, right? I've had a substantial amount of money in, a lot more than 20,000, and I had it in a savings account earlier this year, and I think after the month, I think I gained $3 on it, maybe less, $2.75. So even if I put 20 and got 200,
yeah.
If I put 20 and got 200 from it, it's already better.
Yeah.
Yeah.
And let's be honest, 9% growth, and we'll go back to what we were saying in 2020. 9% growth is better than -70.
No, that's a fact.
And I know it's not sexy, but a lot of the times, in order to get rich or wealthy, you have to sustain all the big losses along the way. Like, I know everyone wants 1,000% gain. I get it. But the first step is not to draw down 50 or 70% or 80%. Shout out to all my Dogecoin holders that's been holding. I love you. I should have delivered the message better.
Hold the line.
Right? Sometimes you got to just be like, it's dead.
Yeah. And it's something like, I mean, $20,000, 10% is $2,000. So I mean, $2,000 is nothing to sneeze at.
Absolutely.
That's it.
And it helps build your confidence. Like, please put this in chat. I need a chain of wins. So like if you get a small win and off that 20,000, now you're up $2,000, and then you make another safe investment like VOO and VT. Like I was talking to Trap at dinner, and he was like, I understand the reason why you tell people VOO, VTI, Apple, or Microsoft, because it's impossible to lose. Like if they lose doing that, they literally just bought at the high end, didn't listen to anything that you say. So now that's your second win. Let's say if you trade and you do one option a year, great, get a win there. You trade futures and do one trade per month. Now you have confidence. You know who people, like the people whose confidence are broken the most? They bought at the wrong time, they over leveraged, and now they're down everything. And they're like, yo, investing didn't work. I'm like, no, the way that you did it did not work. Now, when we have the losses, it feels like God is talking to us from the heavens, but you have to start with one small base hit, one small win. And this is a prime example of getting a base hit and having some safety in your portfolio.
My graduates from my school being Forbes, bag drop.
Bag drop.
A mic drop, bag drop.
Bag drop.